Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move. Today, we are joined by Bloomberg's Daniel Curtis. Daniel, good morning. It is getting even harder to find green on the screen now that China has announced retaliatory measures against President Trump's tariffs. What's got your eye this morning?
Yeah, it's a sea of red out there this morning in the pre-market, particularly Alibaba. It's a Chinese e-commerce company really getting caught up in this tit for tat that we're seeing between the China and the U.S. as, China announces the extra 34% tariffs on U.S. goods. Stock is down nearly 9% just in the pre-market this morning. It's not the only one. Amazon, too, down 6%. These retailers, which rely a lot on shipping, cross-border goods, really taking the brunt of the sell-off here in the pre-market. Alibaba in particular had benefited from a renaissance in Chinese tech. Yesterday it was up 50% on the year. Those gains quickly coming in.
Now, we'd seen Apple get hit particularly hard yesterday with its exposure to some production lines in Vietnam and Indonesia, with the tariffs rising particularly high there. And it looks like the pain for Apple investors is continuing this morning as well.
It is, yeah. So yesterday, Apple lost over $300 billion in value, which was the second largest loss for any company ever. And that, as you mentioned, that continuing today. Right now, ticker AAPL down over 4% in the morning. And as you mentioned, they tried to pivot away from relying on China for production. They moved to a lot of other countries, India, Vietnam, Malaysia. All of those countries are facing higher tariffs. So as we get closer to the April 9th deadline, if we get more escalation in tariffs, as we've seen with China, there's definitely a lot of worry here that Apple could get hit even more on its expensive phones.
And while we continue to watch the fallout from this Chinese retaliation, how are automakers doing now that the auto tariffs have kicked in as well?
Yeah, they're not doing well. As mentioned, many times, all the automakers, they have close ties with Mexico, with Canada. Stellantis in particular is down really hard this morning. STLA down 7% this morning. Yesterday, we found out, late yesterday, we found out 6,000 workers in Canada's auto sector are going to be laid off for a short time. Majority of that comes from Stellantis. So that's the car company behind Chrysler, Dodge, Jeep, and Ram trucks. We've also had reports that Stellantis is going to lay off 900 U.S. workers temporarily as it figures out, the tariff war between between the U.S. Canada in particular is looking at 25% retaliatory duty on U.S.-made vehicles. So the auto sector in particular is really getting singled out in this trade battle.
Now, in our last 30 seconds, Daniel, I see Nordstrom's on your list, not necessarily because of tariffs, but because of an analyst downgrade?
Yeah, it got downgraded from Citi. It's been doing relatively well. There's a pending takeover deal at $24.25 from the Nordstrom family, so it's been relatively sheltered. Citi has mentioned that with all this trade changes, there's a good chance that this deal may fall apart. So while the upside is about 1%, maybe 2%, the downside could be as much as 30% if this deal doesn't happen.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.